Well, let me ask you, talking about clarity, and this is maybe a philosophical, sort of broader policy perspective. I think that there is a common view that your office is using all available means effectively to keep crypto out of the mainstream financial system through enforcement, accounting rules, inspections. Clearly, there's not real guidance yet on custody. And this may very well be a reasonable policy choice, if that's the choice. The question is, if that's the choice, why not just say it publicly?
We're using all available tools. We're talking directly to market participants. We take the meetings and we say, this is how you comply. There's a handful of tokens that have actually registered. The intermediaries, the storefronts, if you wish, the casinos that people are investing in and investing at need to properly comply and disentangle these bundled products. The business model that they've set up is rife with conflicts. And so we've been very candid with them. I've done it in multiple speeches since I came to the agency. We'll continue to engage. We're technology neutral. But if this field has any chance of survival and success, it's time-tested rules and laws to protect the investing public. Disclosure, full, fair, and truthful disclosure. Address conflicts and disaggregate these bundled businesses, and don't have your hand in the customer's pocket using their funds for your own platforms.
But in terms of the larger industry and whether you even seem to suggest the larger industry may or may not survive. One of the pieces of that survival, to some degree, I think, has been this idea that one day there may be something like a Bitcoin ETF or something else. Grayscale, as you know, appealing the SEC's Bitcoin ETF decision, which is effectively to say it can't happen. Is there any path at which you think either that specific ETF or something like it could?
The paths, I'm not going to speak about one, but let me generally say, Andrew, the path forward is well trodden. Whether it's large companies that you follow every day, the Apples and other tech companies, or the automobile companies, manufacturing companies, know how to register their offerings. The exchanges like the New York Stock Exchange and NASDAQ and so forth know how to be compliant and come into registration. The big broker dealers and the small, thousands of broker dealers, the mutual funds.
Right.
I dare go on. We have tens of thousands of registrants that properly, in good faith, comply. They register, they make the proper disclosures. It's time for this group to do so. The runway is getting awfully short, and we're here to try to protect the investing public.
And then separately, while we have you, I did want to ask you about this Wall Street Journal report that the SEC is planning to ease up on some of the climate disclosure rules that had earlier been proposed in reaction to some of the investor pushback. What is the state of play in your mind?
So we've made a proposal about 8-10 months ago to bring some consistency and comparability to the disclosures already happening. Climate risk disclosures. Investors are making investments based on these disclosures. We got nearly 15,000 public comments on that proposal. It is customary, Andrew, in each of our rulemakings that we review all that, we think through the economics, we think through the legal authorities that commenters have raised, and it's quite customary to make adjustments. Your viewers know this, that we did something about insiders selling their stock, and we finalized it in December. We adjusted from the proposal. We're taking up something next Wednesday with regard to settlement cycles. This proposal to move to what's called one-day settlement from two-day settlement.
How much of that?
It's customary to make adjustments.
How much of that reaction, though, from investors do you think is based on the political backlash? And I want to read you. This is from Patrick McHenry, recently announcing a new working group for what he calls a threat to capital markets posed by the far left. He says progressives are trying to do with American business what they already did to our public education system, using institutions to force their far left ideology on American people. Their latest tool in these efforts is environmental, social, and governance proposals. How much of you think of this as the political machine putting pressure on the investor class, which is then putting pressure on you?
Look, I like to say we're merit neutral, whether it's about crypto or climate risk, but we're non-investor protection neutral or capital formation neutral. And so it's about, just in this space for us, it's about bringing consistency and comparability to disclosures that are already being made about climate risks. And investors seem to be today making decisions about this information, these disclosures. And it's not to us about achieving anything else but some consistency and comparability and disclosures.